Hello and welcome to another edition of Stockwatch on this Thursday, the 19th of November. So, in the headlines today, we have Apple, who are going to settle disputes and allegations by paying out $113 million after it was confirmed it had deliberately slowed down older iPhone models. So, 33 US states in America have claimed they have deliberately done this in order for consumers to buy new devices. Millions of people were affected back in 2016 with the old iPhone 6 and 7 models in a scandal that was dubbed Batterygate. So Apple declined to comment. However, the only thing it did say originally was the phones were slowed down to preserve aging battery life. So the deal is separate from the proposed settlement Apple reached in March to pay affected iPhone owners up to $500 million in a class action lawsuit. In 2016, Apple updated software models of the 6, 7 and the SE, which throttled chip speeds on aging phones. So going back to the original allegations, many consumers decided that the only way to get improved performance, obviously, is to buy upgraded and new iPhones. So this obviously fell into Apple's plans if it was actually given that they were looking to do this, and in the Batterygate scandal, if they could get away with it as well. So also in the news is Facebook, and they have had allegations that more than 200 workers from around the world have been forced to go back to the office despite the risks of the coronavirus. So this is probably another little detrimental stain on Facebook after it lost 5% of its market share last week that I touched upon. So we'll look shortly into if it has affected the price any further and if there has been any rebound on the 5% that it lost on the technology sector sell-off last week when the buoyant first initial vaccination news came about, and obviously then things kind of slowed down in the markets. There was a bit of a sell-off in those sectors and also on the US indices as well. So let's take a look at Apple first of all today. So what I'm looking at the moment is we've had obviously the resurrection after the first wave of the pandemic. Now we've seen a bit of a choppy action on the prices, and we're going into a bit of a sideways motion now. There's a slight divergence on the momentum indicator, which could hint at a hidden bearish divergence. So we might see prices actually falter a bit more further down. So with the assistance of the Ichimoku indicator, what I'm looking at the moment is prices are engulfed. They haven't really been shifted away too far from the baseline conversion line. And as I said, prices are trading now in the cloud. So what I'll be looking at the moment is the cloud has a nice top to it, a hard border which indicates resistance. So what I'll be looking at in the next few sessions and as the market opens today is if we can get past this particular resistance level, $120, then I'll be looking at the 125, which was the next next W wave in the cycle. So let's just bring it down to a 4-hour chart now, just to get a bit more intraday perspective. So we've got the choppiness here. I've highlighted the levels that I'll be looking at on the long term on the daily chart, but on the intraday chart, prices are above the cloud now. So as I said, with the market opening, if we can go to these levels here, 120, however, I'll be looking at the top border for a bit of support as well, and that'll be roughly around the $116, possibly $117. And as you can see, the candlesticks are trading between the conversion and baseline of the indicator. So not much to go on the momentum indicator. I'll just take away the long-term bearish hidden divergence, but we'll have to see if momentum exhausts, then we could see a bit more of a bearish move. So that'll be interesting to see in the next few trading sessions. And just a quick look on Facebook now as well. I touched upon it last week on the long-term prospect, and now I just want to look on the short-term prospect that the prices are still in this ascending channel at the moment. And what I'll be looking at just to see if it can regain that 5% that it did lose on the back end of last week So when the market opens again, if we can get back in this ascending channel up to roughly about $279, $280, move away from this confluence zone, I'll just zoom in a little bit more so you can see it a little bit better. Move away from this confluence zone of the base and conversion line and propel itself back up. If not, then the cloud could engulf prices even further, and we could see a bit more of a divergence on the indicator if that happens as well. So I'll be looking to see if prices start moving on, if the momentum starts moving to this area and prices start falling a bit further down, then we could see a big divergence and further weakness on Facebook shares. So that's all for me today. Thank you very much for joining me, and if you have any comments or questions, please feel free to add them to the video and I'll get back to you as soon as possible. Have a great day ahead, and bye for now.